So to better understand the dollar and what's going on in the dollar, and if you understand market structure very well, what happened was that we made a higher high, breaking the structure. Then we came down. Then we came up again. We couldn't break this structure, which means that supply here was what we consolidated for some days before finally coming down. And when we came down, we broke the structure. That's where you get your first trade set up from here, because that's where your first trade comes in. Um, this was supply, I guess, and this was supply. So we knew that since we've broken the structure to the downside, which has made us turn bearish, definitely supply, definitely supply stands here. I guess, and so this was where I took my first entry, start coming down. So if you are a swing trader, I think I took that trade and exited here. I guess, and so this was my first entry. Then my second entry was I waited for all this to happen. I don't look at the back when I'm trading. Never you do look at what is happening here, trying to find your support and resistance, support and resistance. They might not hold. Don't do that. Just flow with the market. If you can flow with the market, understand market structure and price action, you are a professional trader. So if you look at this and what is happening right now in the market, I'm just analyzing the dollar so that you get a glimpse of whatever might happen in the upcoming days. If the dollar is going to go down, but overall, listen to me. Remember, we are still, the dollar is still in an uptrend. Whatever is happening right now is just retracement. Are you getting? The only way the dollar will be in a bearish market is when we invalidate this and is when we break below this. Then we can enter a bear market and know that this will break for us to come back to the 50% retracement or something like that, then flush down again. But for now, the dollar is still king. The dollar is just doing the normal retracement. Are you getting? So the interest rate decision today definitely will not be very, very hawkish. It will definitely be 0. But I'm looking at 0.50, which will make the market to be choppy and a lot of people losing both bears and bulls losing because they are not zooming out to know what is happening. So if I go back to the daily, to what I was analyzing before, sometimes I tend to use my Fibonacci tool to know what is going to happen in the market. As you can see, this was a strong retracement. We were just few one day of what's it called? What's it called? Reversal, which does not even hold. This is just a base candle. I guess this is just a base candle. So even though we'll start going up, this might not hold. It might just retrace back, then come back here. So where are we right now? I'm just trying to break everything down for people that don't really understand how this works or market structure. They believe like, okay, because they say they are the news fundamentals. Yes, they move the market, they affect the market. But this was yesterday. Even with how many pills that happened yesterday, this was what just happened yesterday, as big as CPI. So I don't look at CPIs and those FOMC to trade. I trade areas of value. Are you getting it? I trade areas of value. Now, if I delete this off, can you identify any area of value here on this market? Do your analysis on the daily time frame. That is where you get a lot of confidence. So find a place where there was support, there was resistance, there was support, there was under support here. Are you getting it? Now we're breaking that same support. So use something called a trend line to connect them. This is an area of value we are right now. And as you can see on the dollar, broken that area of value already. I guess we're breaking to the downside. But listen, this can actually just be a faker. So always don't use just what's it called, supply and demand, or what's it called, support and resistance to trade. Yes, we might have broken this to the downside. This might just be a kind of trying to sweep these, what's it called, this liquidity here. I guess in it, then just try to sweep it. Then on our 4 hour, we might just now look at what happens when reversal wants to come. Again, let me use this to do analysis and explain to you. A reversal might just come like this. I guess taking all this liquidity out of this place because we are approaching a very, very large support. It might just come like this, then touch, then touch, then go like this. Come like this without breaking this low, then break high, changing character here, then come back to find our entry here and start going back. Are you getting it? Find our entry here and start breaking and start breaking and start going back. Yes, this the criteria I used on my 4 hour what's it called structure to do to find my reversals back. So until then, we are still in a massive downtrend because as you can see, we broke structure. These are lower low, lower high, then on that lower low again, on that lower high. So since this one broke, this we all know that we have on that lower high. So here now is on that lower low. So since we're on the lower low, we should find a lower high first, then take our entry before coming to the downside. So these are the things you should look at before taking any trade. So let's go into the trade proper. These the scenarios we have on what's it called, the dollar index, which might happen today. So I cannot take any, what's it called? I would not take any trade here until I found my lower high. So my lower high might actually be around this area of value. Are you getting it? If it does not break it, I will still enter, continue to the downside to wherever, till I'm wrong. Are you getting it? So whatever I'm going to do right now is wait for retracement to form a lower high. Are you getting it? Probably since what's it called? Okay, let me do something else for you. Since market structure, since this has been broken, what caused the break of structure? It was this guy. So don't let me do analysis on the let me go to the intraday time frame, which is 4 hourly and 2 hourly. So since you can see that when I open to the 4 hourly now, you can see your market structures very well. Higher, lower low, lower high, lower low, lower high. Hold on, sorry. Lower low, lower high, we didn't break. So these three remains are lower low. Now these are lower low because we've broken. These are lower low, on that lower low. Then since we've broken this low again, these are lower low. Are you getting it? What caused the break of structure is this supply. So whatever I'm looking at right now is markets retracing back to our supply. And if I find anything like a rejection candle or an evening star, or any chart pattern, just go and study chart pattern, any chart pattern at all here before I will, on my 4 hourly or my 2 hourly, before I will take a trade, put my stop loss above here, then we can start getting on that trade again. So this is what you should be looking at right now with DSY. So let me transfer this to the gold because when you're trading, whenever you're trading, so I'm just gonna I think I'm gonna delete everything here so that I'll start afresh again. Sorry, I'm using my unpaid trading view account. That's why you're getting this. Now, see what happened on gold. Are you getting it? See what happened on gold. We have been on this channel. Call this a channel. We've been on this channel since, what's the date? Since 9th of March. So if you understand how all these things work, definitely you would have been able to cash your trading, what's it called? Your what's it called? Your clean trades here. See what happened. Let me use market structure again. We broke up, we came down, we couldn't break. This is a sign of buyers are no longer in the market. So we couldn't break this structure. That's where you know that we're reversing. So what are you supposed to wait for? You're supposed to wait for retracement. Once you break this, then Fibonacci can come in. That first break sometimes does not get up to 0.5. It ends at 0.3. I guess so. Let me zoom out so that you can see very well what I'm doing here. Sometimes once I get this kind of break, definitely it does not retrace back to 0.5. It stops at 0.3. I guess these are things you should be looking out for on your trading journey. I guess to be a profitable and professional trader. So what further happened here? So it's just like a training section, but I'm just trying to break it down to you so that you will know what you are doing. I guess so. When we traced up to this place, when I saw that we broke the structure and we turned bearish, that was where I knew that we are going to retrace up to here. So I took my trade, putting about 100 pips stop loss or something above this last week. I guess so. I took that trade, waiting for another retracement to the downside. Now, I didn't look at all these things because I know all these are going to be liquidity in the market. I guess these are going to be liquidity where the market will have to take them out. Now I'm trading on my higher time frame. Can you see how many pips I'm predicting into the future? 1880 to probably 1700. That's about 100, 1880. That's about 180 movement, right? Which is about 18,000 pips into the future if you're using one word. Calculate that, even though it's going to take months as a swing trader. Then, as the trader going, you know that we are bearish. So, if you get a head and shoulders pattern that says we are going up, don't listen to it. Even though you go on the lower time frames and you see some, let me show you some kind of things that they use in manipulating the market to see if I can get one. What will you be looking at on your lower intraday time frames before entering a trade? This is an ascending channel. Ascending channels tends to do what? Come, enter, short pattern. They break down. So once it breaks down, you can enter, putting your stop loss above here, taking about 500 pips. So these are things I'll be looking out for entering trades weekly with 4 to 5 lots. This is a consolidation that will happen after this breakdown to determine what will happen next. So these are the things you should be looking out for. Now, this is a major supply. If you draw this now, sorry, this is 2K. If we can put this as an area of value because of the break that we couldn't touch, we'll put this as an area of value. Now, listen very well. You saw that there was something that happened here that we couldn't break it. Definitely, no matter this push that happens, I guess in it, we are supposed to break above this to determine that we are back on a bullish trend again. So sometimes, if the 4 hourly is confusing you, the 2 hourly is confusing you, 15 is confusing you, go back to your daily time frames. It will show you whatever, it will to remove the noise and show you whatever is happening. I guess this is good now. Now, this was our first rejection. It tells us that definitely since we've rejected here with 2 days, we are coming back to retest this. If we didn't break, since we couldn't break this, we went up again. We came back again, giving us triple bottom. Do you know what triple bottom means? This is a perfect entry for me to know that was where I gave those signals during the month of November. I did a video on September 20, I think September 28, something like that, calling that we are about reversing because I've been following this, what's it called? I've been following this channel since March last year. Sorry, since March this year. I've been following this channel up, doing higher, lower lows, lower high, lower lows, lower high. I guess it. Now, let me go back and tell you why I think we are going to 1,900. I'm calling on my, I did that call right now. Why somebody said, okay, come up and break it down for us. Then, so that we'll know what we're doing. This, I'm still on good. So, wherever we are right now, I think I'll delete all this. Hold on. No matter how long the video is, just pay attention to whatever analysis I'm giving to you here. I guess in it, no matter how long it is, it's very good. You ask for it, so I'm breaking it down little by little for you, where we are and where we might possibly be going to for you to not to. And I'm also breaking it down because somebody was telling me that what if I enter? Don't FOMO. FOMO means fear of missing out. Don't FOMO. Always wait for your areas of value. Now, do you know that I was on the 4-hourly chart before drawing this? I didn't even know, but I saw it on the internet that this level actually held. I guess. So what actually happened now? This was when we knew that our reversal is coming. I will go back and further break this down finally for you to understand. Now, see what happened here. This was the push, the last push we had. We came up to zero, I think it should be 0.5. We couldn't break it. So your Fibonacci retracements are very important on your trading journey. These things are very, very important. It will give you an insight of where you are going to and where you might be coming back to. Now, the first thing that happened was that we did a fib level of if you have entered this trade from here, where it might get to before coming back down, as I've explained previously. Now, see what happened. I'm on a daily time frame. We go back to 0.618 and we reversed. We couldn't break this structure. That was where I knew that something might actually happen. Then we came up again. We came down. We're supposed to break this. Since we couldn't break it, that's where sellers know that something is there, or there's something that's going wrong. So this was the first one, second one, third one, and this is a very, very good indication that we're going back to the upside. Hence, that's why you saw all this bullishness that has been in the market since what's it called? Now, listen, follow, see what happened, see what happened. Now, this channel now, this is a descending channel which has a 60% probability of breaking to the upside. Now we've even broken out of this channel. Listen to what I said previously. Whenever the breaks happen, don't expect a 50% retracement. Just look for a 30 to 3.382 retracement before going back up. Now, this indication shows that we are back uptrend because we have broken on that structure to the upside again. So we have our lower low. Are you getting it? Now we've broken the structure, give you another higher high. This is a higher high. We've broken this one, so that means we've turned bullish. For us to break this, we turn bullish. So we trade 0.618, we trade 0.38 to just 30% retracement. Now we've come again to break, and now we are in an uptrend already. We are in an uptrend already. So what will we be expecting in the market today, which is on the 14th of December 2022, where the United States government will be giving their interest rate decision. Again, so now hold on. We are here in this push now. We've broken out of this whole channel already. Now we are here. So what do I do? Let me just map this out for you to see. Let me map this out and make it faint, something like that. Okay, sorry. Let me make it faint. Since this is what you want, this is what you've been asking for. Let me make it faint. And let's go back. Let's go down to our lower time frames. What do we have? Now we have this ascending channel. I spotted an ascending channel again on the on the lower time frame. So if I can draw this, connect this, and draw it, you can see that we are having an ascending channel which has a possibility of breaking to the upside. That's a confluence number one, and we are trading in between this box. I guess you remember I told you we're trading in between this box. So I might not use my ascending channel. Where might we be now? Let me break it down. Support and resistance again, and supply and demand. Listen, pay attention. I gave the signal and told you that we're coming back here. Now we came down, we couldn't break. This was even a minor, support, or should I call it a minor consolidation. We couldn't break. We found a support here. Then we came up. So I was expecting that we will come up. There was a big consolidation within how many days? From November then 20 something to around November 30th before we had this. So immediately we broke up. That's when I knew that definitely we're broken on that structure. This is on that higher high, higher low. This is a higher high, lower low, higher high. So Listen, follow up. I know that I might not be giving it accurately the way you want it. I'm on the 4 hour time frame, remember. I'm on the 4 hour time frame. So the things tend to hold here. Where are we right now as it stands? Since this on that higher high, this is a higher low because we've broken above this higher high. So this might be a higher high, might not be it. So what are we looking at right now? I am looking at this place to hold. So I found a very strong support here already for me, since this place has held and has given us a higher high. So what you should be looking out for is this place on the 4 hour time frame. This is automatically our, let me take this out. Let me take this out so that you can see clearly. This automatically becomes our support, our very important support. I guess this automatically becomes our important, very important support. So I'm just breaking this down for you to see. Now, see what is happening here. A lot of people right now, not even on the 4 hourly chart, they are on the 1 hourly chart trying to find entries, seeing all this noise that is happening here and trying to take a trade, calling this place, sorry, calling this place probably a support because it didn't break this. Now, if I'm you, if I even know I'm on a 1 hour time frame, I'll connect the dots and say that, okay, since I want to take foolish trades, I might just say if you trace up to this extent to 1780, I will go back. But I'm saying that I'm calling on us retracing back down to this place. So I don't do analysis on the 1 hourly time frame. Let me go back to the 4 hourly time frame and tell you what I might be expecting the market. Even though the news comes, I guess I will start expanding to the upside. Remember, we are just looking for our next higher high before we get our lower low. Remember, these are lower low right now. I guess these are lower low. These are higher, these are our higher low. These are our higher high. We are trending to the upside. And there are other things I look at again before I take trades. Now, let me go to the daily, check something. Now, since we are on the rise to the upside, is our RSI telling us something otherwise? Yes, because this was a push. Now, this push, the strength, the RSI is called the relative strength index. The strength of this is supposed to break above this. I guess it didn't break above. It's signifying that there might be a little weakness in the market for manipulation to come. These banks and this institution, these market makers are doing something. Now we've made a higher high again. Listen. We've made a higher high again, like as you can see. But what's it called? Our RSI is making a lower low, which means that we might be reversing to the downside. Are you getting it? We might be reversing to the downside. So I am not going to take any position, even though we are expanding, I'm not going to take any position on gold until we can find our support. And here might just actually be a liquidity. Listen very carefully. This is only strong support we have right now because we have support here. Hold on. We have support here. We have some resistance here. That means this place has turned a very, very good area of value. Are you getting it? This place has turned a very, very good area of value. So I will just say we'll have here, have resistance, Now it broke, now turned support. So this is my area of value I'm looking out for. If my trade does not come here, I am not, if my retracement does not come here, I am not taking any trade. That's 176. So I'm calling back on my I'm calling back on my support level to be 1760. So if I don't get that, I will not take any trade, or probably I will take a trade from 178. I don't know. I'm just going to flow with the market. Whatever happens is what I'm going to flow with. I guess it's whatever happens is what I'm going to flow with. So I'm just giving this. I know this video is too long already, but it's a very important lesson. A very important lesson I'm giving to traders that do FOMO because they know that today is FOMC and we're not breaking to the upside, and they might just say, okay, let me take a position from here and just enter and start going up. What if market manipulators come? How much do you think you have on your account that you are playing with over uh, uh, 3,000 pips? over 3,000 people who can calculate it. So I'm not going to play that kind of play. So I'm just going to watch out for whatever happens. Let it run. Let it run. Let FOMC or anything that's happening today make it run. I guess I don't care. Let it run. I trade good areas of value. So this is where I am right now because we have a very big important push on the weekly and on a daily already. See, this is my largest area of value. What if we come down and break this and come down here before reversing to 1,900? So flow with the market, learn to flow with the market, use your brain. I guess these are our biggest area of value, which is on a daily level, and this is our area of value on the 4 hourly. Anything bigger than this or anything lower than this, I don't go on a lower time frame to find anything lower than the 4 hourly time frame. So this is what I'll be looking at. So I don't care if FOMC comes and it expands to the upside. Yes, I know that that's a good trade, but I'm not going to risk my capital because I want to win on important news event. I'll just flow with the market structure and whatever I can get on the market structure. So this is what I have on gold right now. So you that you're asking me that you don't know yet to find an entry, these are our newest support we have right now. It might expand, let it go. Just wait for us to come back and check if we can break this. If we cannot break this, then we know that definitely we're going to 1,900 from here. This is what I'll be looking at. This is what I'm looking out for because that was what happened. I guess that was actually what happened. That we got a triple bottom here, and we knew that definitely we're reversing to the upside. So if I can analyze this very, very well, if I can analyze this very, very well, you know that there's some calls that are entering my phone, so it's disturbing my network because that's what I'm using to um, share network into this for you to get. If I can analyze this very, very well, this is where we're going to because as you can see, this is another block. This is another block. This is an order block here. So this is where I might be coming to. Now, is the structure making any sense to you? Are you finding anything on everything I've been giving here since? Are you finding anything? Are you finding anything? This is how market structure was. This is a triple bottom. So definitely we might be reversing not just to 0. Now, if we go to the weekly, now look at this. If we go to the weekly, we broke the structure. So definitely this might not even come up to $2,000. Definitely we might just be reversing to 0.618 exactly. Does this make any sense to you? Look at 0.618. I've not even checked it. This is the first time I'm checking it. These are 0.5. If we have a rejection from here, we're flushing to the downside, we can just come to 0.618 before flushing to the downside. If we can hold here again, like we did in the triple bottom, that is where we know that definitely if we can hold here again, if we come back to 1,900, if you can hold there, if we can reverse from there, definitely we're coming back to the downside because this is just a retracement. I've given the analysis inside this trade now that once we break down, breaking all these, what's it called? This is just a retracement to 1,900 for us to flush down to the downside. So I might just take a trade from 0.618. If I see that we rejected for 3 or 4 days, I will take a very long swing trade and flush all the way down to the downside, giving me not less than 4,000 and 40,000 pips on gold on one lot. 40,000 pips, calculate that. I might take that swing trade until we get here. Are you getting it? So this is just like a textbook analysis I'm doing for you now on gold. I'm telling you your possible ways to enter, where to enter. This Fibonacci retracement are very, very, very important in trading. Are you getting it? This is where we are right now. So definitely 1,000. Since this is a this was a previous resistance, this was under resistance, this was under resistance, this was a support that got broken. I guess it. So it's 1,900 is a big area of value, and I think this is where investors might actually be coming to. So if you see this, what I just drew just now is a perfect market structure. I guess it. So follow market structures and not just the news. Follow good area of value, find good area of value, and not just the news. So I think this video is very long now. So I'm just going to check Euro USD as the same thing on the weekly time frame and how I've been shopping it and breaking it down. You see Euro USD on the weekly, we only have even just one day of red. It has been yellow, green, 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 green for the past how many weeks? And I've been following it up, trading it out on a daily basis on our intraday trading time frames. So let me go to the daily so that you see what might be happening. Now look at what's happening. Same thing on. So I might just find on that chart so that I will not touch what I've been doing for some time now. So let me find on that chart. Okay, I'm on that chart right now. So on the daily, you can see that. Let me see. It was not clean enough. So on a daily, you can see that we have been on this descending channel since same thing that is happening on gold right now, this EURUSD. Now we had an area of value here. We had an area of value here. Here we had support, we didn't break, we came to the upside. We broke it here, came to the downside. It became resistance, we came down, we couldn't break this. That's an indication that we break. I get into the upside, but it turned to a fake out, came down again. Did we break this lower low? No, we couldn't break it. We formed a higher low. So that's an indication that we might definitely now break this. Now, immediately we broke this, it turned to, what's it called? Immediately we broke that. Immediately we broke that. Immediately we broke this, we changed character here. So remember, I told you that whenever we have a big break like this, we don't usually get up to 0. What did I tell you? We don't usually get up to 0.5. Sometimes we might even retrace up to 0.30, 30% and start going back up. So EURUSD is on a massive uptrend also. So this is our lower low, higher high, higher low. This might be a higher high. I don't look at the back. Somebody might just say, okay, there's another block here that might hold. Now, see what is happening. I might just break it up. So don't look at the back. Just flow the market until you are wrong. Until you are wrong. Are you getting? So higher low, higher high, higher. Why did I know that it's higher low? Because it has broken this higher high rate. So we're going for another higher high. So go on your 4-hourly time frame, find 4-hourly market structure and reversals. Are you getting it? 4-hourly markets and support and resistance. So if I'm to find the support and resistance, I would say that here there's a very good area of value here that we might trace to. So because this is a higher high. Are you getting? So this was a higher high, now turned resistance. So we have this thing, follow up. You just it's logical. It's something that we can do. The resistance, we came back here, we couldn't break it, we came down, we didn't break this, so we are still in an uptrend. So we made a lower low here. So this is still a lower low. We are still trading within this push now. Are you getting it? So we couldn't break this to tell you that we are seeing an uptrend. Now we came and formed a higher high again. We formed a higher low. Now here turns support. So remember, we have resistance here, resistance here, resistance here. Now turns support. So it's a good area of value for us to come back down to. Are you getting it? Now, listen. We can actually use a trend line to connect this to see if it will fail. That's why I don't use indicators. So what might we be having here right now? Are you getting it? With what is happening right now, until the news happens, we must not break a structure. It will make us reverse to the downside. Now, we might be having a higher high, double top there. And if we break down, we change character to the upside for us to come up to this supply. Are you getting it? And flush down to this place, or break down, flush down to our important area of value before expanding to the upside. So if I can just delete all this, go to the higher time frame for you to understand what might be happening or where we might be going to. If you look at this, where do you think we might be going to? So forget the news that happened yesterday. The news that happened yesterday was only from here 533 to 6 something. That's about 200 pips, yes. But we're looking at thousands of pips into the future. This is how to trade so that you can get an insight of where we're going and just say that no matter what happens, we are still in an uptrend. So where my will be going to, let me go to the weekly time frame to analyze for you. Now, look again, look again. The EURUSD is still on a downtrend, even though we're having this massive bullishness for about 7 to 8 weeks now. Now, look, we broke the structure. I get me. So definitely we are pushing to the downside, we've broken the structure. So definitely I'm looking at this. This was our last um lower low, higher low, we didn't break this. So I'll take from here to here and see where we're going to. So definitely I'll call this as my retracement. 0.618 is where we might be going to. That's another 651 pips minus 600, 1,220 pips, about 600, another 600 pips to the future. On one lot side is about 600 to time. That's about $60,000 on a one lot side. So you can just be looking for your full hourly support and resistance and be flowing with it until you get here. That's how to trade. That is how to trade. Do you understand? That's how to trade. So definitely, definitely we are here right now. And I'm just trying to break down to you what we might be looking at using our Fibonacci retracement and market structure. And you don't even expect a reversal. I'm not expecting any reversal to come because until you get a red candle, that is, yes, no, look at this push that happened on the 7th of, from this large push. Now we started coming little by little. We pushed high. Now we are lagging again little by little. So definitely we might be approaching a very important area of value, which is this one, which was the last support. Remember, I told you, remember what I told you, that don't joke with your areas of value. So this is an area of value for now. Let me use this. This is my area of value for now that we had our last, what's it called, support now turned into resistance because we broke it here. So this was our last one. So I'm looking out for this, what might happen between this time when we get here. I guess I might be looking out for that. So if I drop to my daily time frames, I might be looking out for. So let me delete this Fibonacci retracement so that it should not dirty the chart more and more. So look at. Now on our daily time frames, we had support here. We had what's it called? A resistance with break. So this to tell you that we have been trading within this push. We've been trading within this push for a while now. So this is what I'm looking out for. This is my valid area of value I'm looking out for because this was our support. This was our support broken, and we came back to see who can break it again. We couldn't break it. That's when we started flushing down since 27th of May up to this side. Now we started flushing back up again. So I'll be looking out for whatever happens here. Before I'll know that if we can break this retest, then we'll start going back up on a daily time frame. So this is what I'm looking out for right now. Then go back to my 4-hourly chart to find a support and resistance I can hold, which is what I have here. So definitely I might come back, I might be waiting for this before even coming back, or might just even go, I might not even be in this trade, but it's not even worth it. It's just about 150 pieces. It's not worth it risking my capital and losing any trade on. So this is what I'm looking out for right now. And this might actually act as a very important, what's it called, reversal, the way I explained on the DSY. Now, look at your DSY. What are you seeing on the DXY? That's the dollar index. Are you seeing any sign of a reversal at all? Let me see if I can draw a channel on it and see if we can get a reversal using our RSI. Now, we've been on this, what's it called? We've been on this. Is there anything that can give us an insight that we might be reversing? Is there any channel? Or let me use my trend lines to connect. So we started from here to here. Now this is a descending channel which has a probability of breaking to the upside and is on the 4-hourly. So let me use my RSI to see if we are indeed having any form of. Now look at from here. We are here. From here, we are here. Now, since then, now, is there any indication that we have a divergence? Yes. Price is coming down. Our RSI is building momentum coming up. So we might just come to a large area of value on the daily. Let me see if we have any area of value. If we might look at the downside. Yes, because we need to take this out, this liquidity. So lower low, higher low. So if I'm to say analyze, I'll say that I'll take this whole area as where we might come back to. I guess if you can get a reversal, you can just do this. Hold on. You can just do this. Come inside, go up, come down, couldn't break, or we'll get a double bottom. We break this. We know that we'll change character here. Then find our first entry from here. Start reversing back to the upside to see if we can get. Now, this is going to act as liquidity. Sorry. This is going to act as liquidity. I guess so. Let me take that back. This might act as liquidity, and this will definitely be our first supply on the dollar. So everything that happens on gold and EURUSD is definitely this will be our first supply. So if we come back to this place, as a swing trader, I'm explaining this trade for you, not as a trade trader, as a swing trader. Now just imagine that we'll come back to this place and we can't break this whole structure. It will flush us back. Listen. It will flush us back. Now, if we didn't break, then we come back here, we broke down. This will be our fixed entry. I get it to flush us and break the structure to the downside. This is how trading actually works. So I'm going to close this trade for here. Then let me go on Bitcoin. Bitcoin is aspiring to the highs. If you follow up my videos, I told you that we're coming to take this liquidity. And if you go on the daily time frame or the weekly time frame, what can you see? What can you see? Listen to me. What can you see? What are you seeing? What are you seeing? This is a very, very large area of value because we have support, 1, 2, 3, 4, 5, 6. We broke it on the 7th one, or the sixth. Every 6th one usually break. We break it on the 6th one. So this might just be, now everybody's jumping that Bitcoin is going up. This might just be a retracement to this place to dump. So are you finding any correlation on EURUSD? Finding any correlation on gold? Are you finding any correlation on even USD, what's it called, AUD USD? Are you finding any correlation on? So it's just for you to follow structure. Follow structure. Now, see what I've been drawing. I've been following this now, this channel. See what is happening here now. This was a whole fake out on USD, what's it called, AUD USD. So just learn market structure and the price action. That's when you can become a professional, profitable trader. Follow them all. Now I have something like this on. I can't delete this, so I'm not doing analysis on GBP USD. I can't do analysis on GBP USD. This was my large area of value here, so I'm waiting for it to come back before going on. If it does not come back, no problem. I'm on the sidelines. My capital is safe. My profits are safe. So I'm just going to go with gold and what's it called? Gold, EURUSD, probably I've talked about Bitcoin just now. And probably let's look for another setup again. Let me see now 100 and see where I'm going to. So this video is just too long. Use that same analysis I just gave you just now to do analysis on other currency pairs. Now look at what's happening here. This was a strong rejection on this break of this trend line. We don't break it up because we have consolidating here. Now, this is an indication that we came down, we came up, we couldn't break resistance, we came down again, we tried to break resistance, we couldn't break it, I guess it came down again. So we're just consolidating in between this place and this place. So if I take this up, so if I come back to the 4-hourly, find the range on what has been happening on what's it called, NASDAQ, you see that we have been in a range. and we are rejecting massively on it. So definitely, before we can enter a trade from NASDAQ, we need to break above this, hold it with a daily time frame or a 4-hourly time frame. Break this. This will be our safe haven. Sorry, this will now at our safe level. So you can take a trade from here and start going. This is how it works on every market. So market structure, if you follow market structure very well, you can see that this trend line has respecting. So until we break this trend line, before we know that we're coming back to $15,000 plus. This is just the, what's it called? This is just the what's it called, entire market. I'm just explaining for you now. We might not be able to break that. In case we don't break this to the upside and find a safe haven, we might just come back to this place, this trend line, this long trend line that has been coming for since 2021 and flush to the downside. I guess how do you know that we'll flush is when we come back and break this important support, resistance, support. We break it, then we might just come back here and find a probably entry to flush us to the downside. Are you guessing this how market structure actually works? So if you know how to trade market structure, you are a very, very good trader with over 90% probabilities in the market. So I'll just end this here. Tend to my family has been calling me on my phones and WhatsApp during this video. So I'll end here for now, upload it to YouTube before the FOMC meeting that will happen today. I don't really care about the news. I just trade structures. I trade market structures. If I can't find it on the USD pairs, definitely I'll go to AUD USD. You see what has been happening. And you can see that we're on the channel also on AUD USD that is breaking to the upside already. You can see what I've explained now. This was a support, resistance. Now, so the resistance, we've broken the resistance now, and we've even broken this channel. We've even broken this channel to the upside now. If we can break above this, then if we can break above this change character, then find maybe 30% retracement again, then I know we're attacking this high. Now imagine what I've just given you here now. From here, 9,162 to this 303, let me just say 317 pips. Let me use live. You enter this trade from here, 316 pips. Then you take it up to this, what's it called? Large area value. Let me go to the weekly so that you see it. Now map this out. This is our largest area of value on the weekly. Definitely we're coming here, no matter the news that happens in Australian dollars and the Canadian dollars. We definitely coming here. Forget the news that might happen. So you imagine now, this is over 1,000 pips. Have you done your calculation? Have you done your calculation once? Let me use your TFS pips calculator. Have you ever done your calculations? Pips profit calculator. Okay, hold on. That's why I said that I'm doing a, what's it called? I'm just going to follow my rules in which I'm making 300 to 500 pips weekly on the one lot trade. So if I'm using gold, or let me say if I'm using, I'll trading gold mostly because that's where you have the most opportunity. SAW. I guess so. One lot, let me just say they don't start trading for you, even though it's 10 days. One lot on gold. Then probably now we're at 18 buy 1800, even though I buy from here to 1900. Sorry, one lot, sorry. Buy from 1800, even though I buy from here and just wait to 1900. Calculate that. This is a $10,000 profit with one lot. Now let me go to FX trading calculator. How much can you use in trading gold? One lot trading calculator. Gold XAW. How much do you need to enter this on 500 levels on one lot. Calculate. You require $905 to enter a one lot trade on gold. You require 0.1. You require $90. And remember, before I can take a $90 trade on any pair, are you guessing it? I need to have at least, now I'm using just 5%. So let me just say this is $100. Are you guessing it? My account has to have at least, okay, 10%. 10% is 10% of this is $9,000, right? $9,000. So I need to have at least $4,500 on my account, which is just 5%. If I can take the 0.1 lot trade, then if it's one lot, I need to have at least 10% is $90,000. Sorry, is it 90,000? 905. Okay, let me just say 1,000. 10% of $1,000 is $10,000. Okay, $10,000. So I need to have at least $9,000 in my account. Not even 9,000, 5,000, $4,500 in my account to take this trade because I use just 5% of my trade. 5% of my trade to enter a trade. So if this is 5%, let me calculate. Very sorry, be talking sense. So the head sometimes is correlated with whatever I'm doing here. So this is 0.05 times $9,000, $450. Sorry. Just do the calculation yourself. Probably I'm using just if I'm taking this trade, it should be if I'm taking 0.1 pip loss, it's just 5%. 5%, 5 times 5, 900 times 900, which is 1,800. That's 18. Sorry, okay, I'm gotten the calculation now. Since the calculation is like this, so let me just say 905.24 times 2, which is 10%, which is 1,800. 1,800 is 10%. So definitely my 100% will be $18,000 I have in my account before I can take this one lot trade. And if profitable, if it goes my way, it means I'm risking $900. Are you getting it on this trade? I'm risking $900 on this trade with probably a $500 stop loss to make $10,000. What if I'm using 10 lots, which is about $180,000? Risking, I'll be making on $100,000. So this is how trading does what? This is how trading works. So you need to be very focused in whatever you're doing. Don't FOMO into the market. Something called FOMO, fear of missing out. FOMO is not good for the market. Now the market is still consolidating, waiting for whatever will happen on the FOMC. And if I'm to give my analysis on whatever is going to happen in the FOMC today, because of CPI yesterday, the US will not be so foolish to just dump dollars. It will just increase by 0.50. That's my psychological analysis. You can find out, do your analysis yourself to find out whatever is going to happen. So I am here for now. I don't have any support and resistance here, so I'm not going to take a trade from here. I'm just going to wait for my 4-hourly. What happened? What actually caused this push that you're seeing here is this guy. This guy was what actually caused the push that broke the structure. So I'm just going to wait for this guy to come back down here, start expanding to my. So if I take this trade from here, I'll just leave it until it gets to $1,900 to make whatever money I want to make. I just leave it because it's coming to take these guys out. Definitely, it's coming to take these guys out. So it might just come out. It might just come to this guy. Are you getting it? And stall for some days before taking liquidity if I'm coming back. Are you getting it? So it might still expand more than that. It might still expand up to our main. Remember on the weekly time frame, this is our main supply zone. This is our main supply zone on the weekly time frame, or you can use, some people call it order block. This is our main supply time frame. So let me end this video for here. You can use analysis and do your other analysis and see that we're not trying, because if you are able to analyze, I guess it, we're able to analyze on the weekly time frame, which is, let me take these guys off. This guy has broken structure already, changing a weekly character to bullish. So we might just go up a bit to this supply and flush down to 1,732 or 720 that will have a major, what's it called, major supply, weekly supply. Weekly what's it called, says weekly supply. Weekly support, sorry for those terms, they are correlated. Weekly support before going to 1,900. So you have to follow price action. Follow your price action, follow your daily, follow your weekly, and see what is happening. See what is happening, how the prices are going before you take trade. This is why you are losing money, because you don't understand price action and market structure. You understand? This is the best I can do for now. I'll upload this and go and attend to my family. Take care and bye for now. My name is still remains Mr. Marian. Also, I'm CEO of Vision X Limited with other 5 other companies in it. This is my bragging right. This is what I have for the future. It took me years, 7 years to be here to explain this to you today. So if you want to support me, support me, support me. And let's start what we can do from next year, January 1st to December 31st. Let's see who can make a billionaire using my strategy I give to you. Take care and bye for now. Bye. Bye.